The headlines on Reuters Breakingviews this morning. Saudi rhetoric won't ease pressure on US fuel prices. US-Russian trade relations need to be reset, the team argues. And as inflation erodes the real value of money, investing in farmland could be a long-term cash cow, says Robert Cole. He joins me in the studio. Hi, Robert. We'll get on to farmland in just a sec. Saudi Arabia and oil. I mean, I think the point here, and Una makes this in her piece, is that the price rises aren't being driven by the Saudis right now. It's the tensions with Iran that are keeping a support under this.
Absolutely. I mean, something real is happening here. I think that Saudi is pumping more oil, but its ability to pump more oil has never been in question, and so its ability to be able to try and ease the market pressures are well priced, we think, into the market. So while it has had an impact, it's not the big issue, or it's not one of the two big issues. The first is supply constraints. The market is clearly scared what would happen if the Straits of Hormuz was closed. And then there is a demand issue from the world economy as well. I think that's an important issue.
Why are the Saudis doing it then?
Well,
why are they making these noises?
Well, perhaps they still think that they have have the clout to have an impact, and they do have some impact. It's just we're sort of saying that, don't get carried away with this. We think that the Saudi moves are of a second-order importance.
OK. US-Russian trade relations, this Pierre Briançon piece, and I know he lived for many years in Russia, didn't he? This is interesting. So US-Russian trade relations right now are based on immigration policy. Well, the Russian immigration policy. And you're saying, look, that needs to be reset. This needs to be more to be linked with human rights efforts.
No, we're not saying that, actually. What we're saying is that there's a little-known clause, the Jackson-Vanik clause of a trade deal that was set in 1974, which tried to get the USSR, as it was then, to ease up on immigration policies. 40 years ago, that might have been a good thing to do. Now the USSR doesn't exist, and as far, and immigration is not been an issue.
Got nothing to do with that trade relationship now.
So is that right? Yes.
Okay.
This law clearly needs to be repealed. Yep. It's just hopelessly out of date, right? Yeah. Okay. There is a move to replace this amendment with, if you like, a succession amendment, which also links trade with, if you like, human rights abuses.
And this is the Magnitsky Act.
This is the Magnitsky
Bill Browder's
Act.
lawyer.
Yeah. And what we're saying is that, look, let's not replace this outdated law with another one which, albeit modernised, is still inappropriate. We should, yes, there are human rights issues, but let's leave those separate from trade. We have a lot to benefit from trade, and actually just by liberalising and normalising trade relations, actually there may be benefits to the human rights thing.
Oh, I see.
Now, let's worry about human rights as well, but let's do that separately.
Okay. And then finally, your piece on farmland. Agricultural property is the bet. You're saying pension funds need to be looking at this as an inflation hedge.
Yeah,
it's a long-term investment, clearly. I mean, something, let's face it, Jimmy Rogers talks a lot about, isn't it?
Clearly, I mean, you could quite easily and justifiably tell me, that farmland has been the inflation hedge since literally the dawn of civilization. But it isn't one of the, people don't think of it as a classic investment asset, partly because it's a liquid and it's quite volatile and that kind of thing. But the point here is that in my chats with the investment community, with big pension fund managers who have long-term liabilities to match and have a really big fear of inflation, they think that it's only through inflation that the Western governments are really going to reduce their debt load. You don't get inflation protection from index-linked bonds anymore. They're producing negative returns. So the hunt is on for other ways to protect your assets from inflation. And farmland, if you look at the US numbers, has asset values which grow ahead of inflation, and farm incomes which grow ahead of inflation. So it seems to be an option that people should be looking at. They should be perhaps
ploughing cash into ploughshares.
That's the one.
All right, Robert, thanks a lot. Robert Cole. If you want to watch our US Breaking Views show, that comes on every day at 12:30 Eastern, 17:30 GMT. I'm Axel Throttle. This is Reuters. But you didn't.